Hi and welcome to Best in Tesla. So we hear about Tesla's valuation all the time being too high as an automaker. But as I mentioned before, the stock market doesn't care about the past, it only cares about the future and the potential growth a company can do. So the only reason you should be looking backwards is to look at the company's track record. And if we do both of those things, looking back to see the trend Tesla is on, the execution on production, their track record when it comes to production, and then look forward and try to see where this will leave a company like Tesla, I think most people will be surprised of just how fast Tesla could become a multi-trillion-dollar company. And Elon Musk could become a trillionaire by mid-decade, if not earlier, as me and Randy Kirk is writing a book about. And here in this video, we are only talking about Tesla as a car company. We are not talking about the future potential of full self-driving, robotaxis, AI and robotics, insurance, solar roof, battery storage. Only Tesla as a car company will be printing money in only a couple of years. And Elon Musk will probably be the most wealthy man in human history. So let's check it all out and let's dive right in. So keep in mind, I am making this video on the day that Tesla makes the 3-for-1 split. The stock price I'm talking about in this video is pre-split. So firstly, let's just look at Tesla as a car company and how much money they are already making. Because so far in 2022, Tesla has earned more money in operating income than both Ford and GM. So Tesla is already showing us they can earn a lot of money selling electric vehicles, while others still have to show us they can do that. And I mean everyone, that includes Rivian and Lucid and NIO and XPeng and so on, as well as GM and Ford. And remember, Ford's CFO himself has said Ford is not making money at all on selling their Mark E anymore. So Tesla is not only leading in producing EVs at scale, but as an automaker, they have already become something the world has never seen before. Making cars is a highly capital-intensive business, and automakers are constantly fighting not to go bankrupt, as the Altman Z score is also telling us, because they don't really make a lot of money selling cars, but earn their money on loans of cars and service and repairs. Just look at Ford, that had a revenue of $37 billion in Q2 alone, but only earned $667 million in operating income. Where Tesla sold a lot less car and had $17 billion in revenue, so less than half of Ford's, but had an operating income of $5.5 billion. I think this is probably the best showcase of how well Tesla is doing to any other OEM out there when it comes to earning money, especially when we take into account that Tesla had a bad quarter with lockdowns and so on in Q2. Q2 was not a quarter I would call a normal quarter for Tesla, but they are still killing it compared to other OEMs that sells multiple times the amount of cars. So if we instead use some of the numbers from Q1, that was a more normal quarter for Tesla, to guide towards the future, well, Tesla had an operating margin of 19.2%, just unheard of in the car industry. But going forward, with the economy of scale and their 2 new gigafactories getting to high volume production, I would only expect this to become better. But to make the math very simple, let's just keep it to a nice round number of 20%. That will be the number we will be using trying to look into the future. Just the next 5 years. But looking backwards through the last 5 years, from 2016 to 2021, Tesla has had an average growth of 69% in deliveries. Of course, it ended up being 69%, right? But that is even though that Tesla became a bigger car brand with units sold than Volvo and Skoda in 2021. They are not really slowing down in growth though. In 2021, Tesla still grew its deliveries with 87%, despite hundreds of new EV models coming to market. So the competition is no longer coming, it's already here, but it has not slowed down Tesla's sales, quite the opposite. So that should tell us the competition is not going to have an effect on Tesla's sales as long as the EV market is not saturated. So for the next 5 years, it should just continue. So it is not unrealistic to think that Tesla will be able to keep up their growth for the next 5 years. Just 5 years, as Tesla now has twice the amount of factories than they did when they did their growth from 2016 to 2021. And Elon has said that they will announce the next Gigafactory by the end of 2022. So Tesla is not stopping here, but only speeding up, as Elon expects to build about 10 Gigafactories over the next 10 years, all with the capacity of producing about 1.5 to 2 million cars each. And Tesla has made dozens of long-term contracts with mining companies for lithium and nickel and much more. So Tesla will also have the materials to support this growth of its electric cars for the next 5 years. So I cannot see how they should not be able to continue the growth Tesla has proven so far they are able to do. So let's do some numbers here for the next 5 years. In 2021, Tesla delivered 936,000 cars. So let's add the 50% to those numbers, as Elon is guiding for. And remember, he might have been wrong on the full self-driving when that will be, but when it comes to production volume, Tesla and Elon has been right on the money ever since 2014. So we are going to believe Elon when it comes to the production numbers, because here he has an excellent track record. Remember, he said 500,000 units in 2020 back in 2014.
Well, I mean, I feel comfortable that we'll be able to achieve at least 500,000 cars a year by 2020.
And that was exactly what happened. So 50% growth for 5 years, that should look like this. In 2022, we should be above 1.4 million units, 2.1 million units in 23, 3.1 in 24, 4.7 in 25, and 7.1 in 2026. And Tesla's 4 factories they have right now should be able to do this on their own. So no need for more factories to do this. All they need is to ramp up the existing factories and the expansions we already know about, like Shanghai and Berlin and Texas, to be built over the next 5 years. So it shouldn't be a problem for Tesla, as they built 2 factories in less than 2 years. Okay, so that was a growth of 50% for next 5 years in deliveries. And as I said in the beginning, we are going to use Tesla's 20% operating margins as a guideline on the earnings, and an average price of the cars of $50,000. As of writing this, the average price of a Tesla car is about $53,000, but we are going to lower that a bit to a nice round number of $50,000. It will make the math easier, and the numbers are actually a bit conservative. So if we have 7.1 million cars sold in 2026 with an average price of $50,000, that is more than $355 billion in revenue. So about 300 billion more than what Tesla had in revenue in 2021, just 5 years earlier, and about $79 billion more than the entire Volkswagen Group made in revenue in 2021. So even with just 7.1 million cars sold, Tesla will create much more revenue than any other car company on the planet. And only from selling cars, not counting in some of Tesla's other businesses here. And if we take 20% operating margin, Tesla will have about $71 billion in operating income. That is about $18 billion more than what Tesla had in revenue in 2021, or $5 billion more than what a company like Nissan makes in revenue. Tesla will have in operating income. But if we should guess what the stock price will be in 2026, well, we need to get to Tesla's earnings per share, their EPS, and their price per earnings ratio, the PE. So to get the EPS, all we need to do is to divide Tesla's income, its $71 billion in operating income, with its outstanding shares. Tesla has about 1.04 billion outstanding shares, so that will give us an EPS of about 71. And if we look at what Tesla's PE ratio has been trailing 12 months, because that will smooth out some of their highs and lows, well, as of writing this, Tesla's PE trailing 12 months is 110, and its forward-looking PE is 78, all according to Yahoo Finance. So you get a PE ratio by dividing the share price with the company's EPS. But because we don't know what the stock price will be, we can just try to multiply Tesla's EPS we expect them to have with the PE ratio we have right now to get a rough stock price. This is of course a very simple way of doing it, but it will give a rough indication of where this might be heading. So if we take Tesla's EPS of 71 and forward-looking PE, so the lowest of the two PE ratios we have right now, we get a stock price of $5,538. And because Tesla has just over 1 billion outstanding shares, Tesla's market cap is just a little bit more than its stock price, just in billions of dollars. So when Tesla's stock price is getting close to $900, Tesla's market cap is a bit over $900 billion, because we get the market cap by simply multiplying Tesla's stock with its outstanding shares. So if Tesla will have a stock price of $5,538 in 2026, Tesla will have a market cap of about $5.4 trillion. Elon owns about 20% of Tesla, depending on if you buy Twitter and so on. But let's just say 20%. So $5.4 trillion will mean Elon will be worth more than $1.08 trillion in 2026. And the one thing to keep in mind here is that this was just looking at Tesla as a car company, earning the same kind of money on selling their cars as they do today. Some might say that the compact Tesla will make the sales price much lower, yes, but remember, we are not counting in any earnings from their battery storage business like the Powerwall or Maker Packs. We are not counting in any more earnings from their insurance business, their full self-driving software or robo-taxis or software as a service or their auto better software or the expansion and opening of their supercharging network and their solar roof business and their artificial intelligence and robotics. We are counting nothing but Tesla's potential in growing their automotive business with the numbers we have today. And Elon will already have a chance to become a trillionaire already in 2026. But when we are looking at Elon Musk and his wealth, we of course have to count in his wealth coming from his private company, SpaceX. That is right now the cheapest tickets to ride and why they will probably stand for about 80% of all cargo flown to space in 2022. And Elon owns about 47% of SpaceX. That is valued at about $125 billion as of today. So even today, SpaceX add another $59 billion to Elon's wealth, and SpaceX has only just begun. So SpaceX also has huge potential to bring Elon Musk a lot of wealth. But even without that, or the Boring Company, or the Neuralink, that also has huge potential, Elon Musk will probably already be a trillionaire by 2026 only on car sales, if Tesla can keep up their 50% growth for another 5 years. That is all it takes. But if Tesla solves full self-driving within the next couple of years, we have to add a lot of value to Tesla's valuation, so it could happen even faster. ARK investors think that the market for the full self-driving cars will be about $11 to $13 trillion that Tesla will start tapping into as soon as they solve it. And then it only becomes a question of how fast can Tesla scale up and implement robotaxis around the world by 2026. But eventually Tesla will become a big player in this game as well, and it will be far more valuable than Tesla's entire car business on its own, as even 20 million cars with an average price of $50,000 will only be $1 trillion in revenue, and the market of full self-driving cars are estimated to be $11 to $13 trillion. So for Tesla to solve full self-driving will make the talk about Elon Musk becoming a trillionaire or Tesla that is overvalued look like a joke. He will become a multi-trillionaire and Tesla will become a multi-trillion company. But it is not needed for Elon to become a trillionaire. All it takes is for Tesla to grow 50% for the next 5 years. So slower than what they have done so far, so it should be possible. And that will also make the Tesla stock, in my opinion, be worth maybe over $5,000 in 2026. So just as a car company, I would still say Tesla is not overvalued because it's about the future. Because even comparing it to other OEMs, as you can see in this video, does not make sense. Because there has never been a car company like Tesla that earns this big amount of money on a mass-produced car. It is unheard of. Toyota earns about 5% on their Corolla, the world's best-selling car, and Tesla earns more than 20% on their Model Y, which will become the world's best-selling car, and should already be the best-selling car when it comes to revenue. And the trend clearly shows us where this is heading, and their track record shows us it should be possible. So yes, Tesla should have a valuation that is unheard of in the car industry, because what Tesla has done and are doing and will do is unheard of. We have never before seen a company like Tesla. And thank you for watching. And until next time, take care out there and be nice.